Morning, everybody. 8:15 a.m., August 16th. This market's definitely volatile. Yesterday made new lows, closed below the 50 moving average on the daily chart in the SPY. So, Fitch downgrading, China's economy not looking too hot. Bunch of stuff going on, right? We got FOMC minutes today. Target beat some earnings this morning. That's up 6.38%. That's also like a really beaten down stock. TJ Maxx, I believe, is up. JD.com beat earnings, but because of China and its economy, it's down. So, and BABA, like all those stocks, are not looking so hot because of this China economy. So, let's get into it. Welcome, welcome, welcome. If you're new, my name is Steven Gonzalez. Welcome to my channel. Use volume profile, market profile to find structure in the market. Also, supply and demand, gamma exposure levels, the rolling most traded price of the month, the rolling most traded price of the week. All that making confluence, right? Which is a bunch of different inflection points lining up together, gives us really solid foundation to set up a trading plan. So I use those as a roadmap for me to just look at it and go, oh, okay. I look at the structure of the market, right? Looking at a foundation of a house, looking at anything, right? It's got a weak foundation. You want to see the weakness. Got a strong foundation. You want to see the strong foundation, right? And then that will in turn help me and anyone watching the channel like be on the right side. That's the name of the game, right? So if you're new, hopefully you can subscribe and set an alert, right? Also, if you like what you see, give me a big thumbs up, a like, smash it. Always help me out. You can follow me on Twitter at Gonzo719. All right, and then we can get right into the futures watch list. And let's see. All right, silver leading the pack, up 0.3. Crude had some selling, right? Went up to 84. Getting a little love today, up 0.25. 30-year bonds getting bought today, only up slightly, but that should send the 10-year yield down a little bit. Russell is up 0.06, basically flat. The Dow is flat, right? ES flat. 10-year yield is going to report in 2 minutes. We'll see that in a second. Nasdaq's flat. Gold is flat. The dollar is basically slightly down to flat. Bitcoin is slightly down 0.26. Ether down 0.36. The VIX is down 0.49. Still high at 16 VIX, 16.3 VIX. That means a 1% move in the market. That's what the market predicts when you're at a 16 VIX. Okay. Let's move on. Stocks I like to day trade here. Coin's up 3%. Coinbase got approved to trade crypto futures. So they're seeing 3% move today. Nvidia is getting a lot of love lately, okay, with the Saudi Arabia and United Emirates buying Nvidia chips. A bunch of price target raises on Nvidia. They report at August 23rd. Okay, they're up 0.64. Okay, Apple. Okay, I talked about this yesterday extensively on my channel. What did I say has to happen for this market to really go lower, right? Apple's got to be 177 and a half. It's got to be broken and stay under it, right? Well, it didn't do it yesterday, right? It closed below it, which is bearish, but now we're above it. Okay, so that level is very, very key for the market. Very key. I Had a day trade long yesterday. After that price was pierced, I went long. Had a nice, I think it was like 106, 107% return on my trade. Um, so that was a pretty nice trade, pretty easy trade. And 177 and a half is the gamma flip point. And I'm not going to get into all of that, but basically, a gamma flip point is exactly what it means. It flips from positive to negative gamma. All right, you go under 177 and a half and you go under it, right? That means that uh, Apple will be in negative gamma. Negative gamma is more volatile, okay? And what happens is once you start to go into negative gamma, that's when market makers and dealers have to, they'll start shorting with the market to hedge, okay? Because they're short puts, which is bullish. So just so you understand that, the gamma flip point is very, very important, okay? And I just saw some news that came out with iPhones. Let me see if that's what it is. Yeah. It says Apple supplier Foxconn starts making iPhone 15 in India. Okay. That's what that came in. Okay. Um, let's move on. Okay. So snow got a target lowered, but that's not really meaning much. Let's go to any laggard. Now, of course, we got Meta, Baba. A little sad to see that these little pullbacks in Baba, right? Because China is just, it beat earnings, but China's economy just doesn't look good. Doesn't look good. Okay. Um, and JD.com, like I said, beat earnings, but it's down. Tesla, more price cuts. More price cuts in China. Second time this week. The stock's getting obliterated. Okay. You're gonna do price cuts. You're gonna lower your margins. Okay. That's how that works. Let's just see if there's anything on Baba here. What's going on, Baba? It's not really the thing I want to see. This is just talking about the cheaper short. Yep, we already know about that. All right. Okay, so Tesla, I am looking at possibly a put ratio spread in options. All right, maybe I'll go over that later if we have time. Okay, but I'm really looking at it. I don't like the IV's low. You can see the IV rank is 5.8, which means in the last year, this is generally a low IV rank, which even though Tesla's selling off, it's just low, right? You'd like to see a high IV rank like Nvidia. You see that it's 80? That means the premiums for selling options are very high, and the calls and puts are very expensive. All right, so let's move on. Let's go to top sector stocks. Now, Target reported, okay, they beat earnings, okay, so they're up 6.75%. Now in sympathy, that's Walmart, right? That's retail. So Walmart's getting some love, up 0.7. Okay. Chevron got an upgrade. They are up 0.67. Costco, all right. Costco's retail. It's getting some sympathy. Exxon, maybe sympathy from Chevron. Okay. Moving to the laggard. The only laggard on the board is Disney. Now Disney is looking not good. Okay. Made a nice move up after earnings, but it got smacked. So the stock's just not looking good. It is very, very at a like a value wise, it looks okay, but it's just scary to buy. I mean, you can nibble, but it's just not looking good. All right. Um, let's move on. Sectors. Who's the leader? Staples. Now that's Walmart. Okay. Costco, Procter and Gamble, PepsiCo. Those are all staples. Okay. Semiconductors. That's Nvidia. Right. Energy. You don't have to. Chevron. But that's not a big move, right? Overall in energy. Who's the loser? Discretionary. Discretionary is Amazon, Tesla, but Tesla is basically that. But that's not. Remember, these aren't huge numbers and huge swings. Why? Because the market's basically flat. I mean, are we really waiting for FOMC minutes? Looks maybe like it could be. Okay, looks like it might be that. Okay. I don't know who's with us today. Maybe we got Colby, maybe we got William, maybe we got Rosita. Not sure. Am I talking to an empty room? I hope not, but guess what? I do it because actually this is part of my process, right? If no one was watching, I would be doing this by myself. So hopefully it helps people out there because it helps me. This is me constructing plans in front of you guys, right? This is my process no matter if I have anybody watching or not. It's good to have people watch. Rosita, you a listener or a watcher? Lately you've been a listener. Lately you've been a listener. Um, all right, let's get into some news. Let's get into some news here. We'll start off with some things I already mentioned. All right. So we got Target, right? Target stock soared 7.5% after the big box retailer quarter profit exceeded expectations, right? Tesla announced its second price cut in 3 days. Talked about that. H&R Block stock rose 5.2% after the tax preparer reported strong fourth quarter results. Kava, Rosita would like to hear Kava. Kava is up 9.5% after the chain posted a profitable quarter for its first earnings report since its initial public offering. Coinbase talked about it. They got secured regulatory approval to allow U.S. retail customers to trade crypto futures. All right, JD.com, like I said, fell 5% after weak Chinese economic data, even though it beat earnings. And then Tower Semiconductor, TSEM ticker, stock fell 11.4% after Intel terminated its plans to acquire the Israeli contract chip maker. So that's what we got there. All right. We also have economics calendar. What do we got here? Today we got the FOMC minutes at 8:30. Okay. At 8:30, building for minutes, building per minute, housing starts. Nothing really. You got crude inventory at 10:30. That's really the only thing today that's really gonna do anything. Tomorrow, I'm sorry, 2 p.m. you have FOMC minutes. Okay. So we'll hear the minutes from the last FOMC meeting. And so that should be a market mover when it gets released. Will it be a market follow through? I don't know. You don't know, right? Because it could be stuff we know already, or there could be a golden nugget in there that we don't know, right? Let's look at the juice here. Now I did see Fitch, okay? So Fitch here says, right here, Fitch, there is also likely to be sustained fall in labor force participation rates relative to pre-pandemic trends in the U.S. and U.K. I don't know if you know, but Atlanta Fed just said I think GDP is going to go to 5%, I thought, or 4%, something like that. Fitch ratings, GDP in the largest developed economies will not return to pre-COVID-19 pandemic path even in the medium term. Okay. That's something's going on there. Okay, let's move over to earnings. All right, so we already know Target reported. JD.com, TJ Maxx. Okay. Now, today after the close, Cisco. Cisco, I think, would be the only really one that I would pay attention to. Right. Tomorrow we have Walmart, Dole, Billy. Okay. So those are the ones I'd be paying attention for tomorrow. Applied Materials is after the close tomorrow. Ross. All right, it's more retail. And then John Deere and Xpeng on Friday. All right. So that is market news. That is the economic calendar. We're going to go right into the daily charts. Boom. Right into the dailies. Let's look at those dailies, right? Here's my new express version of the daily charts to give you a little more time with your boy. All right, so what do we got here? So let's look at these daily charts. All right. So yesterday we opened here in the middle of the previous day's range, went up a little bit, and we went down and closed below the 50-day moving average. Okay, close. Remember the orange lines on my screen are previous week high and low. Close below last week's low. Okay. Now, where are we at now? 442.73. 442.73 is right there. We're at the lows of yesterday. That's bearish. Okay, that is bearish. It's bearish structure. Okay, so moving averages check. We're below the 20 simple day moving average. We're below the 90 MA daily. Okay, we have a trending down in the medium term, right? We have a larger trend line from down here. You can see a larger trend right here. Now this is what I love about trend lines. They're so cool because they line up with major levels. So what's going to happen is this trend line is going to move up to here, right? So if we fall down, see this trend, you could either go by my monthlies. This is last month's lows, right? 437. This trend line will line right up with that if we fall there. I believe that's our next destination, 437, if we are to fall. Remember, Apple is the key to that. Okay, Apple's the key to that. So that is the SPY. Okay, so 437, keep that on your radar. 437 in the SPY. If we fall, that will probably be support. Okay, and this is the beauty, real quick, about having my levels, the monthlies and the weeklies on this chart, right? Because look, here's the monthly lows at 437. Well, guess what that is? A prior weekly low, right? Another prior weekly low, and a prior weekly high. See how that all lines up? I could see the confluence right here, right there, okay? Now let's look at my support and resistance levels real quick to see if that lines up there. What levels we got? So the key 444, we broke that. Okay, so like I said, this is the next one up. And just for here, because it's not a little clean line, but I'm going to put that right around here. And we'll go back to the trends. And we'll move on to the Qs. Boom. There's the Qs. Let's look at the Qs together. All right. We got a trend line, right? Look at that. These trend lines are something else, boy. I mean, look at that. One touch, two touch, three touch. What did we touch yesterday? Right there, right? Now in the Qs, notice we're getting weakness in the SPY because of financials. Okay? That is not in the NASDAQ. So the NASDAQ did not take out the prior day's lows. Okay? It did come up and touch this trend line and the 90 MA daily. Also closed below the 50-day moving average, but didn't take out the prior day's low. And it's also the prior days before that's low. We got a week low here. Now look at our weeklies. This is last week's low, holding last week's low. Here's last month's low. Okay, let's step back a little bit. Step back a little bit. Okay, this is starting to create a little bottom here. Okay, so you got your 100-day moving average here. Now remember, Apple's at its 100-day moving average. Microsoft is also close to it. So right here is a key level, 363, because what is that? That's last month's lows. Okay, last month's lows. So let me see what levels I have on here just to make sure. What do I have here? 364. All right, so I'm the next big level is 355, but we have to go underneath this monthly low in order to get here. So that's just possible destinations. Okay, possible destinations. Where are we at now? 366.30, 366.30. We're at the lows. We're at yesterday's low, so we're bearish. Okay, we are bearish. Bearish structure. Okay, let's move on to the Dow. Now the Dow. Okay, look at the Dow. Broke the uptrend yesterday. Closed below this range. This is very key in the Dow. All right, you had a range here. You had a trend. You broke it. Now, here's last week's highs and lows. We're closed below it. The previous week, you closed below it. Okay, you see the destination we're looking at here. 50-day moving average. What does that line up with? I'm all about confluence. 345 right here. Look at the left of my cursor. What's here? Well, not previous month's highs, right? It is July's highs. I'm sorry, June. It's June's monthly highs. So there's confluence there. I might look at something like a put ratio or a butterfly targeting that level if there's farther downside. If there's farther downside. United Healthcare is the largest holding. So you have to see. Now that's tricky because United healthcare is defensive, right? If we're going to go into a recession, people are going to want to be in healthcare. Healthcare doesn't suffer, right? People still unfortunately get sick, right? So really important in the Dow. Really, really, really important. Look at here. You have a gap. You don't have a lot of support. See, this could be looked at as single print-esque right here. You could drive us right down to that 50-day moving average. It's the only index that hasn't really touched it. Moving on. Russell. Getting killed because of the regional banks. Okay, Moody's actually downgraded regional banks. All right, that's a more respected firm or whatever. All right, let's look at the Russell. Here's that uptrend. Broken. Here's the 50-day moving average. Look what it did. Opened at it, closed below it. Okay, closed below it. So it's below the 50-day moving average. The Russell was holding this range for a while and it was not as weak. But then forget about that. The Fitch ratings just destroyed it. Where the regional banks go is where Russell's going to go. Okay. So see this range here? We're about to dip back into this range. Okay. Got some trend lines here. You got 200-day moving average. So look what happens to the bottom of this range. 100-day moving average, 200-day moving average, all here. Okay. You also have last month's lows down here. You know, if you keep getting that negative news with the banks, it could cause some trouble ahead for the Russell. Okay, let's look at some levels real quick. 188, it's a key level, right? It closed below it. All right. That wraps up the indexes. Okay, let's move on to the triple headed monster. Let's look at that because bonds are having an argument with stocks, right? So let's check out bonds right now. Now look at what Jesus. Bonds are getting sold right now as we speak, driving yields higher. It started out here. It was below yesterday. Now 10-year yield is rising again. Okay. We're above last week's highs and lows. See that? The yields are just climbing, right? That's the high, 4.3. Again, that's the October lows. That's the inverse of the index. But really, it hasn't been. This is when we made the lows because yields went so high. This move up, the market's been going up. I mean, lately it's been going down. But a lot of this move, the market was moving higher. So they were arguing, right? Yields rising as I'm speaking. Who's going to win out? We'll see. Let's look at that VIX. Look at this VIX. Came all the way down, touched here. Look at that. Look at that buying excess just now. That's more fear. Right now, more fear. Okay? Markets are getting a little more red as I see this VIX rising. Okay? Now check out last week's low. Last week's high. We're inside last week. You got some resistance here. You move up into the 17s. Well, you might be looking at a move lower again. But I don't know. I mean, I don't make predictions, okay? I don't make predictions. I only trade what I see. Look at the friggin' dollar. Doji, doji, doji. Okay? There's last week's highs. There's last week's lows. Last month's highs. Okay? This is last month's highs. Just a doji factory here. Holding last week's highs. Okay? So that's pretty bullish for the dollar. That's bad for commodity. That's bad for equities, okay? Coming up on a 200-day moving average, right? Look at that, right? The dollar's right there. Look at this confluence, right? You also have last month's highs, lines up the 200-day moving average, and we're hanging above last week's highs, okay? Have to see how that plays out. It's just crazy, the dojis in this. It's just crazy. The body of the candles they don't have no bodies. It's insane. All right. This could only mean, what do we got to look? Let's look at the euro. Euro's got to be going down, right? It's got to be. Oh, I did the wrong slash. My apologies. There we go. Euro's going down. See that? All the way down, right? So the yen and the dollar are the biggest. Euro's the biggest basket in the dollar against the dollar. So that's why that happens. All right, let's go into market profile and volume profile, my friends, my buddy, my favorite. Look at the structure of this market. Let's do it. Let's do it. Okay. Let's move this up so everybody can see. All right. Where the hell's my marker? Oh, right there. All right. Let's look at our structures. Same thing we do every day. Okay. We have kind of a completed profile, right? Because we broke the lows here, right? So now we have some excess. Now check this out right here. We're starting to build out some volume here. Okay. So you need this to move down here, and then we might see it move lower. All right. Let me fix something that I see real quick, guys. This is a chart. It shouldn't be on here. That's a naked VPOC that got hit yesterday, so I got to get rid of that. Okay. So let's look at this, right? Let's look at our levels. Most traded price of the month, still way up there. Okay, but it's about to make a move down. It's about to. If we stay down here, we're gonna make a move. But most traded price of the week, what we got? It is 44.93. 44.93. Okay, we're below that. Structure's bearish. Okay, we're below that. Where did we go yesterday? Notice supply. Most traded price of the week was resistance yesterday. That was the resistance yesterday. Okay, these levels mean stuff. Okay, these levels mean stuff. Now look at the group you have up here. Look at that. You got your 50-day moving average on a daily, 9 EMA daily, right? Supply, and you got the most traded price of the week up there. That is going to cause some resistance. It's going to cause some trouble if you get back up there. Let's look at yesterday as relation to today. Here's the highs. There's yesterday's lows. Okay, got some single prints here. Off the open, we just sold off. We just sold off. Boop. Right? Then we made a little comeback, but then we closed at the lows. Right? Now, here's the overnight high. Here's the overnight low. Look at that low. This is a weak low. That's weak. Now, that's begging to be broken. So you got a weak low here. Okay. Now look at this beautiful profile on the overnight, right? It's pretty much a bell curve. So we don't have much edge with that profile. That's not a lot of edge, okay? However, we have a weak high. We have a weak high here. So we have a weak low and a weak high. All right. Now I don't know who's watching, and I can pick this out very quickly now. But like I know, I would eventually. I don't think Rosita's watching. Like to see some people nail out these weak highs and weak lows. So here's the weak low, 44, 47. That's begging to be broken. Okay. Now we have a weak high. What's the weak high? Right? We have most traded price of yesterday, which would be around what is that? 44.65, and we have an overnight high. So this is like right here the points of buyers or seller strength. Okay, and you have supply zone here. So this is really important, these two levels. It's going to dictate what we do today. Okay, it's really going to dictate inventory. Look at opened here. Longs, shorts, not an edge. Not an edge. Okay, we are in demand. We are in demand. So let's go for our scenarios, okay? Let's do it. So I'm going to go bull first because I see a potential shorten the whole scenario. Now this could break here. This weak low could definitely break. Could definitely break while I'm speaking, but it's okay. So this is what I see. Okay. This is very bearish because price is here and we closed here. Okay, so this is bearish. Yes, Colby, this is right what I'm going to get into, right? Is it could be, right? That's the case of why we do scenarios, right? So this weak low here, which is the overnight low and yesterday's low. What could happen? Now remember, if you don't have demand on your chart, you don't know there's demand here. That's the key, okay? This doesn't mean that we're gonna rip higher. It just means that this isn't easy to break. So let me give you the scenario, what I could see happening. Weak low, demand. What could happen very easily, and to get sellers caught in the hole, is you break, and I would say this would be probably a little bit of a violent break. It could be a push and test the edge of this demand zone. Now, what's going to happen most times when you see that? Okay, sellers, if you're a bear, you're going to get excited. We can pierce. If we break the demand, fine. But if we kind of recover quickly, make a lower high, okay, this could be at least a short move back to this area, okay, because this is the area that's going to be resistant, okay. This is how the market works, okay. It's going to trap you into thinking we're going lower. Now remember, Apple needs to break and hold below 177.5. Microsoft 320. Okay? If that does not happen, we're not going lower. Now, this is not me stating I'm a bear or a bull. This is just a fact. Okay? And this could happen before the market opens. So, pay attention. This is very key. This weak low can trap and set up sellers to get caught. So I'm looking for this. Now, what also is at that level? Apple right now is at 177.45. It's right at that gamma flip point. So think about that, right? We're at the lows here. Apple's right there. It's at that flip point. It needs to get flushed below. Apple needs to get flushed below, which would move this below, and hold that level. If it crosses it, guess what this market's going to do? It's going to rip off, guess what? The shorts from here, the shorts from here. And you have the most trader price of the overnight right there. See how that works? See, I'm not looking at short here. Me, I don't look at, I'm not hungry for it. It's about to break maybe, right? I'm not hungry for this move. That doesn't mean anything to me. That's poor trade location, right? So I'm looking for this and this. And if, like I said, Apple starts moving above 177.50 with strength, most traded price of the overnight, and you take that out, you're going to go to at least here for a nice move up. And then it's the market's job either to break this and hold it. You're going to go up and test up here. And that's going to be very resistant with the 50-day, the supply, yesterday's high, 9 AMA daily, the most traded price of the week. I mean, that's just a lot of confluence up there. This is what I see. Making me very excited for that, to be honest with you. That's what I see. Okay? Now, let's go. Now, before I finish that, does that, if you're still there, Kobe, does that make sense? Or anybody else? See how all these little nuances mean something, right? Now, if we're going to short land, now scenarios, we got to talk about a scenario, right? We got to talk about the scenarios, right? So scenarios doesn't mean what I believe is going to happen. Okay? So here's that weak low. Now we got to look at it from a bearish perspective, right? So what if we do smash through this? Smash through the demand. Okay? And Apple also goes through 177.5. See, we just broke it. See what I'm talking about? We just broke the weak low. Right there. Look at that excess. Right as I'm speaking. You see how that caused excess and it's starting to move up? I'm not calling for it to move going rocket up. But look. Now you got excess here. We just got our weak low broken. Now it's the part. Now it determines if sellers are strong or not. That's what this determines. This could be the trap. Okay, so now, I'd still consider this a line in the sand. So if you're bearish and we move down and Apple holds below 177.5 and Apple starts to hold it and starts to go lower, well then you could test and you could hit this naked VPOC, make our way down here. This is about 44.25. Okay. Now the other move is exactly what happened in the bullish scenario that I gave before. Okay, let's say we recover, go across the most traded price of the overnight, come back into here. Well, guess what? this is going to cause tough sledding, right? So if it can't take this out supply, starts making some lower highs, well, we're going to roll. And this is the place you want to be for that, right? If you think the bear, then we're going to test this again, and this could cause this as well, right? And lastly, if the market happened to come up, take out this, come up here, well, then this also could be a part where you just do that. Okay. Now let's go over to the Qs. All right, so there's the Qs. Let's look at our structures. Here's our profile. Don't have a lot of excess here. Okay, remember, this is not financial. See how it's not touching these lows, right? But we're like right at the lows of yesterday right now. Okay, so we have room to the downside for the make that profile complete. Okay, most traded price of the month's up here. It's about needs some time to move down. Okay, needs some time, but you notice this volume that's building out here. You could move the most traded price of the week to here, and that would be very bearish. Possibly break this. Okay. All right. Let's look at structure of what we have going on here. Now, this was just a week low as well. It still kind of is where price is. Now, price can keep moving, and then that's not a week low. All right, but we do have, oh, there it is, moving lower. Okay. We do have this bottom of this range in the cliff that I showed everybody in the NASDAQ. That's the cliff. Falls off that cliff, we're moving lower. Okay, but you need to break it and hold it. So yesterday's high, yesterday's low, overnight high, overnight low is probably going to be extended now. It's right here, but I have to talk about where it's at now. We got a perfect profile. That's no edge. Inventory, that's the shorts, that's the longs, no edge. That doesn't come into play right now. Okay. We have a weak high right here. That's the overnight high, the most traded price of yesterday, right here. Okay. That's the testing point. We also have the most traded price right here. So that has to market to show some strength. It's got to break that and hold above here in order to do anything like that. Okay, but the market's below it right now, where it's below it. So we're in demand too. Just notice that. See, if you don't know the demand zone, that's why I just like it. Keeps me honest. The demand zone, right? Keeps me very honest. Because remember, this is the big level, 150.15. If you break it and you hold it, we're going lower. Okay, but do you break it and hold it? That's the question. So let's go over scenarios here. Okay, so bullish, again, it's very similar. That big level here, fine. Could the market come down here, break it? Okay, but if it recovers, it starts to make higher lows, guess what we're going to do? Guess what we're going to do? We're going to come back. And what's going to happen is first test will be the overnight most traded price. And if you take that out, you're going right into here in the overnight high and yesterday's most traded price and supply zone, right? If you take that out, you still have to contend with the most traded price of the week, but that's a lot of tough sledding, and you hit the 9 EMA daily. Could happen, okay? What also has to be looked at again, 177.5 in Apple, 320 in Microsoft. Those have to comply with that move lower, that break lower. Make sure to look at that. That's your telltale. If, oh, wait a minute, Apple's not breaking 177.5 and holding it, It's above it now. Wait, Microsoft's above 320 and moving back. I would not be shorting that. Okay. All right, let's go with bearish now. So bearish is you come down here, you break it, and you hold, 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 hold. You're going to go down here and go down to this demand. You're going to start that cliff dive, and this could actually probably go to this end of this demand and maybe even lower. Okay, that's if it's just gap and goes, right? Because we're in a small gap. Me, that's not my style. So for me, a bearish scenario could also happen is, yes, we do come up into there and test this area, this weak high, and then we could roll, right? And probably have break that and hold it and do the same thing. Okay. Now, if this market really gets some buying today, and we might want to take out all this stuff, there's supply here, and this also could cause, the move back. But just look at Apple, 177.5. That's your barometer. Okay, that's the barometer. All right. As always, if you enjoyed what you saw, subscribe, set an alert. That would mean a lot. Also, give me a big like if you like what you saw. Okay. Smash that like button for me. You can follow me on Twitter at Gonzo719. Alright, so hopefully all that made sense. Thanks, Colby, you too. Alright, so, back in the day, just to give everybody some perspective from my trading mind, I would be like, ooh, hungry for a short. Oh my God, I want to short this. I'm reversed now, right? Because now it's like, okay, prove to me that the shorts are strong. I need to see proof. But if you can't show me proof, I got to go long. It's just a different mindset now. So that price doesn't mean anything to me. The structure is what means something to me. So if you get a sharp push down and then a sharp push up and you start holding it, well, guess what? Shorts are in trouble. And it doesn't mean the market goes to all-time highs right now. It just means that that's how the market works, right? Based on people's emotions, right? I'm not going to short the lows. I'm not going to long the highs. It doesn't make sense. So, hope everybody has a good day. Stay green. Hope everybody got something out of this. Like I said, first time in the channel, welcome. Please come back. That's about it for me. I'm going to go now and game plan for some trades. Now, I'm going to tell you right now, I told you already, one is a long. I wrote it down. Again, this is not financial advice, obviously, but this is what I'm interested in. Now, I'm looking at coin. Okay. I'm looking at coin holding yesterday's highs around 82. Yesterday's highs was 81. No, yesterday's highs was 82.5, around there. But I'm looking at if it's to hold 82. It could do whatever it wants, go higher, but if it holds 82, that could be interesting, right? There's been a lot of selling in coin. It's holding its 50-day moving average on the daily. And Apple, 177.5. Okay, I played that yesterday. Now, I am flowing like water with Apple. Okay, so 177.5. If we rip down and then come up and can't get above it, I probably want to look at a short. But if we rip down, rip above it, hold it, I'm probably going to be looking at a long. And if the market's still in demand and everything else is starting to scream higher, well, guess what? You put the shorts on their heels for the medium term, and we could go back into balance, right? That's what I'm looking at. I mean, there's other stuff I have to still look at, but that's what I'm looking at right now. So everybody have a good day, and I'll see you guys tomorrow.